All right, what's up, traders? What's up, tycoons? Super excited for today's video. We've got to talk about natural gas. Okay, we're going to break down natural gas in various aspects, starting with, we're going to be looking at the futures weekly time frame. Okay, going over a possible count we have here. We have both a bullish and bearish scenario lined up for you guys, so you can be prepared for either way. And then we'll zoom out even more, look at it from a monthly perspective, so you guys can truly understand the monthly supply and demand zones, and why these are important areas, and why we're battling, and why we've been battling pretty much all of 2023 to really break out and make significant new highs. We're also going to look at the 4-hour time frame. We'll break down the signal from the last video that we showed as potentially forming what it was that you wanted to look out for, and how it all played out. Okay, we'll go over that. We're also going to take a look, of course, at KOLD and Boyle, some of our leveraged ETFs here that people really love to trade a lot. There's some warning signs to be basically prepared for, be aware of, some different things that I've told people about before, and we're going to break all of that down in today's video. In summary, and some of the key points that we're going to go over is you want to find your edge. Okay, and number two is you need to trade the chart, not your emotions or your own personal bias. And then three, all right, we're going to go over MACD signals. Number four is going to be divergence formation. So these are going to be, potential entries or exits based off of, the formation of a divergence. And then number five, this is something that, a lot of people miss out on when it comes to divergence trading, is once you get that break of divergence, that's often a good trading opportunity as well. And number six is going to be to spot the gap. So we'll break down all of that in today's video. Be sure to smash the like button, subscribe to the channel if you guys are new. As always, the content provided on this channel is for informational and educational purposes only, and is not intended to be relied upon as legal, financial, or investment advice. So please be sure to read through the full disclaimer. Now, we're going to start off here with the Boyle chart, okay? And this is our daily time frame for Boyle. The first thing that we're going to talk about are gaps, folks, okay? So there's a gap in between this candlestick and this candlestick. These gaps, they tend to fill 90% of the time, right? Let me change the color of this box so it's a little bit clearer for you. And you can see there's a gap in between these candlesticks and a gap in between these candlesticks. Now, when Boyle was up at these levels, we're warning people, hey, there's some gaps down to fill, right? We have this gap down to fill, and you can see it filled that gap very quickly. We have this gap down to fill, and it took a little bit longer, but that gap ended up filling. If you take a look right now, we have one more gap to the downside on Boyle, right around $52. Now in pre-market, it's at about $54, close to $55 at the moment. But it's very possible that Boyle could grind down. And we know that this is a leverage ETF, dropping $2 for Boyle is really nothing. Okay. Now it's not all doom and gloom, but there are plenty of gaps up to fill. Okay. And the gaps up do fill as well. If you take a look, there's a gap in between these two candlesticks, and you can see that that gap came over, started getting filled here, right around the middle of May. Then here we had another gap up to fill, right? And this gap ended up filling, basically a month after that gap formed. So, gaps are something that you do want to pay attention to. And the reason is because 90% of the time, those gaps are actually going to fill, okay, historically in the market. Now there's tons of gaps up on the Boyle daily chart, like, in the, thousands, basically. We're not paying attention to those. Okay. What we want to do is we want to chart up and pay attention to the gaps that we're close to at the moment. And if you take a look, we're trading right in between a gap to the upside and a gap to the downside. So while you do need to be cautious of the gap to the downside, and you want to have some type of a plan in place for the potential of that gap filling, there's also a gap to the upside here to fill, right? And we can see, here shortly, we should see which gap is going to fill, right? We're, just a few dollars away from both of those. Now, I mentioned divergence trading. Okay, in the formation of divergence, if you're not familiar with that, we have a low here circled, and then we have a lower low here circled as well. Well, when we look at our RSI, we see we have a low, and then over here at this point, we start creating higher lows. So Price action is going lower, creating lower lows. Meanwhile, the RSI is going higher, creating higher lows. This is a simple term known as bullish divergence. And you can see that that takes Boyle from the 60s right here, from 60 up to about $72, $76 in price. Now, that's a really good trading opportunity. Now, the big mistake is to hold on to your positions forever and never take profit, or at least have some type of a stop loss, whether it's a trailing stop loss or a hard stop loss, something like that, because you can see it quickly gives up those gains. And what does it do? Well, it actually creates another lower low, right? So now we have a low here and a new lower low, all right, from our original lows. But what is our RSI doing? Are we still maintaining that divergence? And you can see that, yes, we are. And so, the you can catch the original move up, right? And let's say you get stopped out, somewhere around here, you made a couple bucks on the play, and you see that it starts making lower lows. You're like, okay, well, good thing I sold. I took those profits. Let me look for a new entry now. Can we bounce off of this bullish divergence trend line? And sure enough, we do. And that's when you can take your next trade, your next position, right? Ride some of the momentum, take some profit along the way. And then what do we see ends up happening? Well, we see it ends up reversing and yet again, making a new lower low, right? And we're just continuing this habit of making lower lows, but bouncing off of the bullish divergence trend lines whenever we, come and tap on those bullish divergences, right? You can see here, yet again, we're continuing this higher lows, right? We have a low, we have low, we have low, we have low, and we have a low here, and they're all higher lows while price is going lower each time. These are really good trading opportunities. Now, when we talk about a break of divergence, and we'll have a good example of that very shortly, you can see that now we're testing this trend line here again. So, if the strategy is going to continue working forever, this is a buy opportunity and we're going to rally to the upside and get some type of bullish momentum. But the thing is just like any trend line or any level, the more times you test it, the weaker it's going to get. And we just showed how many times we've tested this trend line, nearly 10 times. Eventually this will break, right? And so that's what you need to be cautious of. If we break through this trend line, most likely Boyle's going to have, some nice downside coming very soon. And that's something that you want to pay attention to and look out for, because that could be a trading opportunity to go short natural gas, whether you go short Boyle or perhaps you go long KOLD, right? And when we speak about this break of divergence, that's exactly what KOLD did. All right. KOLD had bearish divergence, right? So it had these highs and then it started making all of these lower highs here, right? And most recently, we actually just broke out to the upside from this bearish divergence. Now, let's draw a vertical line here and take a look at, from the break of this bearish divergence, and see where, what price action really did. And you can see that KOLD went up 10 bucks, right? It was trading in the 50s here, right around 52, right? And then it went all the way up, to around $64 a share. And that's at the break of divergence, right? Initially, what it did was it was causing drops, right? Here we have a high and then we have a higher high here. And what do we see? We see a high and a lower high, right? And then what do we get? A drop in price. Then we continue that trend of making higher highs, but making lower highs on the RSI. And we get another pullback, right? Same thing over here. We have a slightly higher high. We make another lower high, pullback, pullback, and we continue doing that, bouncing off of it right here most recently and getting this bear flag to really start to form here. But we didn't get the bear flag to come out in full fruition. Okay, we did get an ABC move to the downside, targeting 44. That was, kind of where we're looking at. But, ultimately, KOLD has rebounded. And we talked about the divergence forming, the break of divergence forming now. And then now we have a gap down. So there is a gap down on KOLD to fill, but take a look. We have two gaps up to fill here, right? And also here. So now that's our big question, right? We see Boyle is trading very close to a gap up and a gap down. Meanwhile, KOLD is very close to a gap down, but has two significant gaps to the upside, leaving lots of upside potential, right? It's at the 60s right now, and these gaps will take it up to 60 or I'm sorry, to the, the 80s and $75 area. So now we need to look and pay attention, what are some of the warning signs? What are some of the signals that we can see whether something is about to go bullish or bearish? And that's when you want to start paying attention to the futures. This is the 4-hour futures chart right here. And what we have currently at the moment is a megaphone pattern. Okay, so we have our expanding trend line here to the top and to the downside, and oftentimes this looks like a megaphone, and price action will zigzag in between these areas ultimately before getting a breakout. Now, when you start combining some of your indicators together, like here, we're overbought on the RSI. And then what happens here? We get this white line crossing below the red line on the MACD. This is typically known as a sell signal or a bearish crossover, whatever you want to call it. And by combining, more than one strategy together, we can help give ourselves an edge, right? We're actually using two indicators now. So we're using what's known as a leading indicator, your RSI, and then a lagging indicator, your MACD. The reason the RSI is a leading indicator, because it's going to tell you what's happening as it's happening, and say, hey, well, we're up here at these overbought conditions. It's very possible the stock could have a pullback, right? And your MACD is a lagging indicator. It's going to tell you what's happened after it's already happened, right? And a really good, visualization of this is you can see this is when we got the MACD crossover. It was after this huge red candlestick. Now, our leading indicator, right, our RSI, showed us that, hey, here we are overbought. So it's very possible we could get a pullback. Then we get a significant red candle here. And that's afterwards, once we got our MACD sell signal was right in through this area. And you see it ended up leading to downside. Also, after we broke our trend line. Well, here, you can see we actually broke through the downtrend line, this downwards trend line, and we had a MACD crossover to the upside right here, right? And so what do you see the very next day? We gap up and we break through that trend line and start having a nice little push. And in the last video, we talked about how we were overbought. We did not have a MACD crossover to the downside, but that's what we wanted to pay attention for as a warning signal, right? We came into the overbought territory. We started to consolidate a little bit. We had our trend line here. We actually broke through the trend line and got the MACD crossover to the downside, just like we did right over here. It was an exact repeat of some of the same signals. And, you could have, capitalized off of this with a short position, or maybe you could have protected, some profits, exiting a position based off of these warning signs. Now, when we zoom out and take a look at the monthly time frame, some things that are important to understand right now is, yes, we do have this very long-term demand zone that price action has been reacting to very strongly, right? As soon as we've come down into this area, it's immediately been met with demand and pushed price higher. But this overhead supply zone is really important. Okay, each time we've come into here, we've really just dropped back down. Now, we haven't crashed necessarily, and that's not what I'm suggesting, but this area of overhead supply, this is going to be an area where, at the end of the day, all overhead supply is just an imbalance of sell orders. There's too many sell orders in this area that ultimately keep pushing price lower. And so the big question is, as we come in here and absorb these sell orders and these sell orders get executed, the big question is, are they being replaced, right? Are new shorts coming into the market replacing some of those short orders and some of those sell orders? Or eventually, for us to break out to the upside, what's going to happen is we're going to absorb all of the sell orders in this area, and get rid of that imbalance of sell orders. And if not enough sell orders are being replaced, that's ultimately going to create a demand imbalance and push price up higher. But given that this is a monthly time frame, it's going to take a while for this to happen, right? Look what happened over here. It took almost 2 whole years for us to really absorb all of the demand we had here, and create a demand imbalance. All right. Before we actually saw the next move. And so we've been trading and entering and testing this supply zone for almost the entire year of 2023, but we haven't gotten a breakout to the upside. Okay, and the reason being, again, is because of that large imbalance of sell orders, that large imbalance of overhead supply that needs to be absorbed and replaced with a demand imbalance, with an imbalance of buy orders. Now, this is our weekly time frame. These are some possible scenarios here on the chart to look out for. Real quick, we do want to mention that break of divergence again. Okay, so take a look at how we have a high here, we have higher highs here. Price action is making higher highs. The RSI has a high, and it has these lower highs here. Okay. And what we're looking for is the break of the initial bearish divergence. We already broke through the shorter term bearish divergence, and that was a good entry point. Okay. If you look right here, right, we have high, then we have higher high, we have high, lower high, bearish divergence. We end up getting a pullback. And at this moment here, we actually broke through, and natural gas was right around $2. The natural gas futures were right around $2, right? And then we had a nice little rally here up to $3. That's a 50% move on the price of natural gas futures. Really good trading opportunity if you just entered at the break of divergence. Now, the bulls are going to tell you that this is an ABC correction. Markets tend to move in 3-wave and 5-wave structures. And so an ABC 1, 2, 3 pattern, that's going to be a correction, right? And then you would look for the next, leg up, the next 5-wave impulsive move to the upside. And we have what's looking like a pretty textbook ABCDE wave 1 for a triangle pattern right here. Your wave 1, your 3, and your 5s are typically 5-wave moves, and then your wave 2s and 4s are typically ABCs. And so the big question is this ABCDE, a pattern to the upside, or is it a pattern to the downside? Right. If it's to the downside, that's going to send the natural gas futures. The target for those, the projection is about $1.08. So we need to pay close attention, right? We haven't really broken through that trend line, but we are approaching it and getting lower. So we'll see if we can get a breakout to the upside and push up higher. That's going to take natural gas futures, back to an area where I think that we can head is going to be right around this $3.50 to $4 range. We haven't really tested that area very much, right? You can see, old support, old support, old support, and then, completely no support over here. And we haven't retested it since we've blown through that area. So, if we do get a bullish move to the upside, it would make a lot of sense for price to gravitate towards that $3.50 to $4 price target, in my opinion, there for the natural gas futures weekly chart. Now, I do want to mention real quick, if you made it this far, please be sure to smash the like button, subscribe to the channel. I actually started a completely free newsletter for you guys called Investment Intelligence. There's a link in the description and also in the comment section down below. If you guys are fans of free trade ideas and also just valuable, content and information, and you're fans of free valuable content, I highly recommend checking out the newsletter. There's also a website associated with it that turns all of the newsletters I've sent out kind of into more of a blog style post, so you can go back and read some of the previous newsletters that we had. And I do viewer requests every single week, so you can head on over to Ko-Fi here. This is my Ko-Fi page. There's also a link in the description. All right, and you guys can request a YouTube video on here, and commission a viewer request and let me know exactly what it is that you guys want. This is a way for you guys to be more in control of the content you want. It's super cheap. It's $6.99, so it's not like some big fee or anything like that, or like I'm getting rich off of these, but just a way to commission some viewer requests for you guys. I also do coaching, one-on-one coaching and personal sessions every single week as well. You can commission those directly through Ko-Fi here as well, and you can book a 30-minute or a 1-hour session, whatever it is that you like. And we can work on scheduling a time together after you have commissioned that, right? It's also a pretty cool way you can come in here and you can like buy me a coffee is what they call it. It's basically like a tip. You can set up a one-time tip. You can set up monthly donations, however you want to do it. But I'm starting to use Ko-Fi now. This is a good way for me to connect with the audience and let you guys have somewhere where you can come in, request specific videos, where you can book your training sessions, all in one place without having to reach out so much individually by email and just have all these random emails coming across my inbox.